RBC's top bank analyst thinks Morgan Stanley's issue should be taken very seriously. Gerard Cassidy is the head of U.S. Bank Strategy. He's got a hold rating and a $91 price target on Morgan Stanley. Gerard, great to have you with us. You've been listening to our conversation. How do you think this actually impacts Morgan Stanley?
Over the near term, Melissa, it is certainly going to weigh on the performance of the company. It's unfortunate that they're running into these problems because BSA, AML, as everyone's been talking about, are very serious. They will get to the bottom of these problems. They will solve these problems, but it will take time. It will take some money. And as I think Karen pointed out, it's going to distract a number of people in the organization from growing that business. And I think it was Guy that mentioned that, you know, this has been a real source of strength for the company in increasing its valuation over the last 5 years. And now it's unfortunately running into some issues.
Hey, Gerard, it's Karen. Thanks for coming on. I'm a little confused about sort of the dripping out of, all right, so there seemed to be a problem in January. Now it seems to be bigger. How do you think that happened? I'd much rather, as a sad shareholder, see a giant settlement, fine, whatever it is, and the end of the issue, as opposed to this kind of slow burn.
No, I understand what you mean, Karen. And we saw it actually with New York Community Bank when you saw their problems in January, totally different reasons. But what outsiders sometimes don't fully appreciate, as much as we think the regulators talk to one another for a coordinated effort, that's not always the case. And I think that may have been the situation here. We don't know for sure, but it wouldn't surprise me that, you know, the regulators they're all in their own silos and they are very protective of their turf and they go about it their own way. And that therefore that January announcement may have brought the other regulators on board to take a look as well.
Let's downshift, Gerard, if we may, since you're here and you're on the Mount Rushmore of bank analysts. Bank of America is your top pick in the space, I believe. So the question I have is, does that mean by definition you have to think rates are going down? Because when 10-year yields were 5% and their hold-to-maturity losses were $114 billion, this was a $25 stock. It's not coincidence that it rallied as rates went down. What are your thoughts in terms of BAC and interest rates?
It's a really good question, Guy, because when you think about Bank America, one of the great strengths of this company, it's true for some of the others like JP Morgan and regional banks like Fifth Third and M&T Bancorp, it's the core consumer deposits. That's the critical story for a bank. And as we all know, following the financial crisis, when you had rates at 0 to 25 basis points, core consumer deposits were not that valuable. Now with rates at over 5%, they're extremely valuable. And so the Bank America long-term story is about that phenomenal deposit base they have. But to your point on the held-to-maturity losses, when you take a look at that, the stock obviously was lower, and that was when everybody was very fearful of what that meant for maybe capital. But now people realize that the held-to-maturity losses will weigh on their margin, but over time they're burning off. So we're 6 to 9 months, further into it, so it's not as much of an issue. But I think we're going to hear about the AOCI. That's the marks that they take through capital on the calls this week because those numbers have grown for everybody.